The following is a presentation of TFNN. Time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good afternoon, folks. Well, tomorrow we're going to have a special guest, Norman Winsky from Astro Trends will be our guest. He is probably, Arch Crawford is the grandfather of financial astrologers, but we would probably think that he would be a grandson. Norman would be a grandson because he's been doing it for a very long time also. And but he is very knowledgeable, has some really good information for us. That'll be tomorrow at the half hour. We'll have Norman Winsky from Astro Trends. The first chart that I wanted to talk about today is rather important, I think, because it's also Fed Day, and everybody's expecting sometime in the future, which is really not saying anything, that the rates will go higher. I don't know. We've been going down for since like 32 years. 1980 was the I think 1980 was the first move, and now it was 82. August of 82 is when they first start dropping rates, so it's been going on for a long time now. With quantitative easing, we have risk on, and so it's really actually risk off. You really have the Fed just pumping money in it, just like they're doing in Japan and just like they're doing in the ECB. Boys and girls, I don't care what the news is telling you. History says that stuff don't work. It doesn't work in your family, and it doesn't work in the government, and it doesn't work in country by country. It just doesn't work. You just can't keep printing money and expect something good to happen from it. My opinion is what's happened is the Fed has tried to alter the cycles, and they've done a great job since 2009. Now, the chart that we're showing here on the Treasury notes is related to the cycles that I was talking about, because usually there was a 4.5 year, 48-month cycle that was in the stock market for many, many years, well over 150 years. But since 2009, that's shifted quite a bit. It's been skewed by quantitative easing. What we're seeing now here on the Treasury notes, if you'll notice those cycles that are from April through September and September through March, those are 116-day cycles. Those were named nominal cycles by Jim Hurst in his book, The Profit Magic of Stock Transaction Timing. And the problem is they only usually work for 2 repetitions, and then they expand and contract because, cycles are not static. They're always expanding and contracting. So you only see these work for usually 2 repetitions, and that's all. Now, you'll notice there's a half cycle in there of 58 days, which also works nicely. And this is where early in the years, back in 72, 73, when Jim Hurst was, very popular with his, what was it called? Cyclotech series of charts that was very, very popular because he believed that these cycles were always static or nominal. In fact, they shift around a lot, and I believe it's because of the influence of the universe, which is all related to these harmonic numbers of the Fibonacci summation sequence and the numbers of sacred geometry. Dr. Andrew Lowe, in his book, The Evolution of Technical Analysis, was written about 6 or 7 years ago, I believe. The first 50 pages of that book, and Dr. Lowe is from MIT, as most of you know. He runs the applied mathematics section there. He's responsible for many of the quants that come out of Wall Street. He also runs a $3 billion hedge fund where the profits go for cancer research. So he is a very philanthropic young man, along with being, a very brilliant man. But his first 50 pages of that book were related to the early technicians, and he referred to these as the astrologers. He goes back to Sumeria and Babylonia, eras where they talked about the eclipses and the wheat market related to Mercury and things like that. These are things that were written on stone tablets that survived, the ages. So there's something to it. The question is, no one's been able to decipher it completely. Whether they will or not, I don't know, but bits and pieces of it are certainly there and are applicable. We have one of those situations coming up tomorrow, and one of the charts that I'm going to post in here right now is the chart sent to me this morning by our good friend Arch Crawford. Uh-oh, come on, don't tell me this. It's still working. Hold on, boys and girls. We are okay. Give me 1 second, and I'll be able to get this up here. It basically shows what we're happening now with planetary storm. 1 second, please. there's a solar storm going on today and tomorrow. It is huge. It's one of the biggest ones we've had in a very, very long time, and this affects a lot of things. Anything electromagnetic, things that are communication-wise, maybe your Apple might skip a beat or whatever it happens to be, but these are electromagnetic things that occur quite a bit. They also affect the market. So we're going to have some great volatility. We already know that because we got the Fed coming in here, and then we also have the new moon and solar eclipse are coming tomorrow. So that's going to be very important. And then the next day we have the spring equinox, which was also one of the things that the Babylonians used quite a bit, as did the Aztecs and the Mayans and the Egyptians and so many other people. So it's going to be a really, really wild day. Now, if you stop and think, what would be the thing that would really make the markets go crazy? And that would probably be the first interest rate rise that Yellen might surprise everybody and raise it by 1/100% or 1/4%, whatever the prevailing talking heads would like to do at that time. So we'll have to just wait and see, what's going to happen with that. But no one really knows for sure, so we'll just watch it. But it should be really, really crazy, no matter what. That's what the bottom line looks like from my perspective at looking at this. Now, if you look at the Treasury notes that we posted first, you'll see that we've had a situation where we've had a did the chart post for the solar energy the solar energy start? It did. Okay, good. I couldn't tell whether it did or not, but Art sent that to me and said there's going to be something crazy, but we don't really need any help given all the other stuff we got going along. This is just another added factor. So we've got to keep an eye on it. It's going to be in an hour, I believe. In 45 minutes, the announcement's going to be made. So we'll see, what happens with some of these markets at that time. But we'll have to, wait and look at it. The stock market still looks bullish until we take out last week's lows. We take that out, it's game on to the bears because it's going to really crack. Because that was a very, very important cycle bottom, and if it breaks, boy, that's a really, really, really important spot that we had last week, to really watch that. So we'll, we got 45 minutes to see. Fortunately, we'll be off the air here, so we'll be able to watch it by ourselves without being on the air. But it's going to be quite volatile, I think, today and tomorrow. And, about 8 of the last 9 days, we've had 100-point moves in the Dow. If you remember, it'd been weeks, I think it'd been 14 months where we had hardly any volatility at all. And now we're starting to see the volatility. And it's just starting. I think you're going to see it greater and greater as we go through this thing. Now, when we talk to, when we listened to Basil just recently, he told us that volatility index is basically telling us that there's just absolute complacency all across the board. And I have to agree. I mean, you see that everywhere. That you see, in all the markets, you're seeing that the same amount of volatility is just people they're accustomed to thinking that the Fed is always going to be there to protect us. And I'm not sure, that is going to be the case. We just have to wait and see. Maybe I'm cynical here, and as I reach the old octave of life, but that's the way it looks to me. I don't know any other way to put it, but that's what it looks like to me. So we'll see if that's going to be the case, but that's neither here nor there. The U.S. dollar is still strong. We've had a 200 pip rally now in the euro this week, based from a very, very oversold condition. But in a matter of seconds, we could be looking at those old lows without any trouble at all. We still believe that market is heading towards par or 99 and possibly even lower. And that's not an amazing prediction, because, once the euro traded at 85, then it went to 160. It did that twice, 85, 160, back to 85, back to 160. I mean, that's pretty volatile. So, all I'm saying is just looking at those patterns, that's what it looks like to me. Nothing more, nothing less. The one that still has my interest, of course, are the gold and silver. The problem is they're just not moving up very much. And that's not a very good sign when you're, hoping. Well, hoping's a terrible word for, trading. But I really think that gold still has a chance, even though it's a slim chance from here. And silver has held. We want to take a quick look at silver, because we're still in that ballpark for a potential bottom here at $16 an ounce. And we want to get that going. We're going to have Jim Bartolioni, he's my trading partner, is going to be on the show sometime in the next few weeks. And he's going to go over the silver market with us. He's the gentleman who gave us the price at $14.10, which was the low back on November the 30th, and how he came about that, and, where we are now. Because we're just about at the 786, which comes in at $15 and 20 cents an ounce. That's down about 20 cents from where we are right now. So we've got to keep an eye on that. He'd be happy to talk to you folks when he finally gets on the air, but he's a very, 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 very nice fellow. He is one of, I happen to be fortunate enough to trade a complete group of Top Gun pilots, including the instructor. So there were 5 of them in the group. 2 of them have their own mutual funds now. One's a private trader in Kuwait. He works for the Royal Kuwaiti Air Force for Boeing, and he teaches the folks how to fly the F-18s. So it's a very interesting group of guys that I've got to meet. They have discipline that goes beyond normal folks. Let me tell you, they do a great job with that. Now, I will post this chart for silver in here, because we've got a chance for silver to come in here and hold this level at around 15.20 per ounce. But whether it does or not, who knows? We got stocks down a little bit. Gold is rallying a little bit, and we got to pay a few bills here for our leader, Mr. Tom O'Brien.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartlys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we are going to take a look here at this VIX index because we've had a pretty wide range today. It's about 3 times normal, which you should be expecting that with what's happening with the VIX, which also, it has made a little Gartly pattern. Thank you, Marshall, for bringing that to our attention. It stopped right at the 786 of the previous low. But on the day of Fed Day, I'm sure you have people that are taking protection on either side of the market. Now, we haven't had a really major surprise since 95, I believe, was the year that our friend Mr. Greenspan came out, and right in the middle of the day, well, it was regular Fed time, they decided to drop rates 0.5%. That was back in 95, and the S&P left a 50-point gap. In other words, like today it's trading at 2060. The next trade was at 2110. It left a 50-point gap. The largest number of bankruptcies ever on the Chicago Mercantile Exchange that day. He literally decimated the folks there on the floor, and that was a very, very bad thing to happen. Now, the way that works is when a floor trader gets smacked like that, especially an order filler that's in there trying to fill paper, he has to come up with money. And the way it used to work is that he would work these trades off with someone who would loan him the money, whether it would be very heavily bankrolled floor trader or someone like Goldman Sachs, they would have the deck for him, and they would have access to the trades, so they would gain a point or two on each of the fills, and that's how he made up his $500,000 or $1 million debit that occurred. This happened once during the Jenny Mae eras during the 1980, and then I'm sure it happened at the Merck in 95. But that's just was very, very hard to do that. I mean, they're welcome to do whatever they want to, which they do, but usually something like that is done after hours. It probably wouldn't have made any difference after hours, but I don't think it would have made a 50-point gap. What happened was it shocked everybody so much that it was just really, really tough. I happened to be on the right side of it, but I had went to the movies that day. I remember it was a Wednesday, and when I got back, I couldn't believe where prices were. I just was just absolutely shocked. But the thing to remember here is that they will do things like this occasionally, but whether it'll be today or not, I don't know. You can't protect yourself against outlier events because a stop during this time means nothing because there's no liquidity. The buys, they just become bids. There's no sellers. And if you're short, you're in big trouble. If you're long, you're a happy camper. So we'll have to just see what happens. Now, one of the things I wanted to talk about here, I know it's not the commodity show, but we have something really interesting happening, folks. Mr. Z just posted a chart into Tiger TV. I've asked him to do that. It shows the price of Brent North Sea crude. And as you can see, that is making a 61% retracement, whereas we've made new lows in WTI. West Texas Intermediate has made new lows down at the 1.27 level. CNBC is talking about the collapse in oil prices, which they've come down, but they're certainly not collapsing. They're only down just a little bit, from yesterday. And, Brent is still above the highs. In addition to that, we have gasoline futures are still at the 382 retracement of the low we made in January. So there's a low coming in here in the oil market, folks. That's what it looks like to me. I mean, you don't have to be a rocket scientist to figure out there's some buying coming in somewhere, because WTI is weak, but Brent North Sea is just making a 61% retracement. So we want to keep an eye here on the oil market here, especially we'll talk about it tomorrow, but on the commodity show. But that's what we're watching here in oil. You should be ready, to look at it. You've got very bad news came out. They increased the inventory by 9 million barrels or something like that, which was a big shock. Yet the market couldn't go down. I mean, it's still down, but it couldn't go down hard. So maybe it will later, but right now that's what we're looking at. But that Brent, should be able to do it. There's a lot of people. Our friend Terry here in the Tiger TV just mentioned there's so many people on the same side of the market, and that's true. There's one other, just to expand on what Terry just mentioned, is when you get the boat, with everybody on one side of the boat looking at what's going on one side of the boat, it's listing, and you got to be really careful. And no market is listing no more than what the euro is. I mean, the euro is listing like the boat is already tipped over. And if there's ever going to be a shock, it could be in the euro today. Okay, we'll be back after we pay a few more bills to do the second half of the show.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and apparently we've got a cult following going here with our good friend Priceline Charlie from La Paz, Mexico. Had two requests about Priceline. We looked at it on Monday, I believe, and it looked like it was heading down towards the $1,100 area, specifically 1,098. Today it's down just a little bit. What's amazing, folks, here is the fact that this is a much weaker than market stock. I mean, we've had a couple of 100-point rallies here during this past 7 or 8 days, and this market has not moved. This stock has not moved to the upside at all. So when you have a weaker than market stock, that is a really strong indication that we are probably going down to that 1,100 area in Priceline. It just will not get out of its own way. So even when we had the big rally the other day on Monday, the stock couldn't even get up. So it's really a bad sign, which tells us that we're probably going. It's a really nice technically traded stock. As you can see, the big ABCDs and the butterfly pattern that appeared on the bottom. And then we had the 3 lower tops that occurred in February and then September. And again, August, and then again in early March, we had the same thing. So that's where it looks like it's heading to me. is down towards that $1,100 area. And whether that's going to be the case or not, I'm not sure, but that's what the technical picture, looks like here with Priceline. I've also had a request to talk a little bit about Apple. As we talked about it on Monday, down at the 123 level. It'd been down, I believe, 12 days from the high. It was due for a correction. We've got a little bit of a correction going of about $4 in Apple. So it still looks to me like we're not going to get above that 133 level, but folks, we're within a heartbeat of it right now. So, something really bullish came out of the Fed, Apple could go, a lot higher. But here again, it's one of those situations where you've got, everybody's in the boat and they're all looking over one side. So you've got to be, extremely careful in here. We'll know more about that, I imagine, over the next couple of days or weeks, but that's what it looks like right now. Frankly, I think the one that everyone should be watching, well, not everyone, but if you have an interest in commodities, is to watch for a potential bottom here in oil, folks. They're really screaming at you that there's a bottom coming. I mean, gasoline is only making a 382 retracement, so this is really something very, very important, in my opinion. Oh, we've got our caller from California. Brent, are you there?
Today.
How are you?
I'm doing fine. How about you?
I'm above ground and staying away from open graves, my friend. What can I do for you?
Could you please take a look at the small caps?
IWM, the IWM, absolutely.
Yeah.
Well, it looks like we're making getting ready to make another new high. I think we have, haven't we? Yes.
Yeah, I hit it almost the exact pick at the previous high there. So.
Well, we've got a lot of tops in here. Let me post this into the room here, Brent, so everybody can see it. But we're either making a double top in here, right about where we are, or we're going to pop through and head up to that 126 level. But with Fed Day today, anything could happen. But we did make a top there for that 3 drive to a top pattern. But frankly, we only sold off to the 382 level, which we sold off to the 618 and this on the S&P and the 618 on the New York Stock Exchange Index. But the IWM would only, sell off to the 382, which in itself is, a pretty bullish sign. Let me put that in here so you can see that where it sold off to the exact 382, because it's been the stronger one. So we'll have to wait and see. The key for me, Brent, is that low we made back just a few days ago on March the 10th or March 8th or 9th. If we ever take that out, then you can go short. But until that happens, this market looks like it wants to go higher to me.
Okay. Would you have a second to look at ExxonMobil?
ExxonMobil, is that XON? XON, yeah.
M as in Michael.
XOM. I know I've got it in this thing somewhere, but I don't. Let me see where I have it. You know what? Why isn't it there? Let me add it for just 1 second. It'll only take me a second to do that. You don't mind staying overtime, do you?
Not at all.
It's XON or XOM, isn't it?
M as in Michael.
And M as in Michael. Okay, let's get that up here and we'll take a look at it. That's one stock that I would be looking to buy. Uh-oh, what's wrong?
Yeah,
see.
That's my question.
Yeah. Well, I believe that the oil is bottoming. Okay, so that's one stock. Well, it's up today, and it made it bottom several days ago. So let's. That's made a beautiful pattern on the downside on the daily, going over the last couple months. I hadn't looked at this before, but it was pretty much spot on. A beautiful butterfly bottom, wasn't it?
That's what it looked like, and I don't do a lot of shoulders, but yeah, it looked decent to me.
It's perfect. Yes.
Okay.
That looks to me like another indication that oil could be bottoming here, because the stock's up about 2% off its bottom already. But as long as that bottom holds at that 82 level, this looks like it could easily have a nice run to at least 90 or 92 without any trouble at all, I would think.
Yeah, I thought it was kind of interesting that it was not backing off when oil was still dropping, so that seemed like it was kind of hanging in there.
Good.
All
any
right,
other charts? Okay, that's it. Thanks for calling in, Brent. I appreciate it. How's your weather over there? Did you get any rain relief at all?
No, it's been beautiful. I mean, it's really nice weather, and we'll see. We'll hang in there hopefully for another summer, and just have to hope for a better one next year, I guess.
Amen. I do the same thing all the time. Thanks for calling in, Brent. We appreciate it.
All right, always appreciate your help. Take care.
You bet.
Bye.
Well, looking at ExxonMobil now, folks, that gives another indication that there's a possible low coming in here in the oil market. So let's keep an eye on that. In fact, it's coming. Oil, as we speak, is getting closer to the high of the day versus the low of the day. And with bad news not going down and all the other things that are happening, that tells us that we are, looking at a situation where we've have bad news in the market, and the market's not going down, and multiple contracts are not making new lows, like Brent versus the heating oil. So, versus the crude oil for WTI. So this is one of the things that I would be really watching. I'm not trying to talk my own position here. I'm just looking at what I'm looking at. As far as the gold is looking very, we've been down to this. Let's post this in here because we've had some really nice patterns form here in gold over the past couple days, and there's going to be a lot of movement today in gold, and I believe it's going to be to the upside, but that'll be Fed time, I think. But if we look what's happened over the last 5 days in gold, you can see that we made the butterfly pattern down there at the 1142 level. We then rallied $17 an ounce up to the 786. And those of you that have read any of my books, you'll know that the harmonic number in gold is 17 and 34. We then pulled back to exactly 786 down at 1145. And now we're making a small ABCD here at 1153. My assumption is, and this is the small bet that we made here today, or let's call that an intelligent risk speculation, is that we will be looking at a move possibly up into the 1160s today, given the right news from the Fed. If you're wrong, we were looking to buy it around 1145, so basically would have our stop at our break-even point, but that's what we'd be watching at that particular time. One of the things I wanted to mention, this is March Madness week. Everybody in the whole country that's ever watched a sport is certainly interested a little bit about their alma maters, whether it's Indiana or Kentucky or Duke or wherever it happens to be. But I have to tell you a real interesting story. Many years ago, the Mr. Basketball in Indiana in 1985, I believe, was Steve Alford, as I recall. Could have been 95. It's either 85 or 95. Must have been 95. But his father was the coach at the high school when he went to it. He went to Indiana to play under Bobby Knight. He was Mr. Basketball. They won the tournament that year, the NCAA tournament. I think that was Bobby Knight's second or third tournament championship. But Steve Alford went on to coach at a small. We got a caller in. I'll finish this story. This is more. David from Clearwater is a lot more important than my old stories. David, are you there, my friend?
I doubt that seriously, Larry.
Are you at the Starbucks in front of the Scientology office?
At the moment, you mean downtown sort of Scientology World Global Headquarters, but at the moment, no. But I'll tell you, it's funny you should mention that. I've spent a lot of time in that Starbucks, which is literally right down the street from TFNN headquarters there in Clearwater. But, hey, listen, Larry, thank you for taking my call. I realize that it's not commodity day. That'll be tomorrow. And I'm sure you're aware of this, but if not, just bringing it to your case, I happen to agree with you that I think oil is bottoming. Now, I mean, here in a few minutes, depending what the Fed decides to do, the dollar could, skyrocket and commodities go down further. But I think we're making a bottoming pattern. And if you look at the K5 contract, which is the front contract at the moment, it's looking like we're making a very nice butterfly pattern. We just finished an ABCD down, point starting on like February 17th. your B point is, let's say approximately the 26th of February there. And then your C point, picks up again on March 5. And it did a 1.618 expansion on the C to D relative to the A to B leg. So we got an overextension that way. And then if you start as your X point, approximately on the 29th, you'll see that it makes a pretty nice butterfly pattern, just a little bit shy of the 1.27 expansion on the move down versus on the move up, which would take you in about like 42.60. But if you look daily, if you look intradaily, it looks like it's setting up let's say like on the hourly or the 2 hourly, setting up a pretty decent 3 drive to a bottom here, Larry. And I think
yes, you're absolutely correct. Yep.
You know what I mean? It's looking like it might be time to, I'm going to trade the contract, but if not, maybe buy USO or buy, ExxonMobil or, some of the larger players as well, some of these shale players here. It would be interesting to see, though, because tomorrow is the supply report. And, the West, as you well know, the West Texas Intermediate plays off of that supply report in Cushing. And from what I've been hearing from some friends of mine that work in the oil industry, price of fundamentals are getting better on shale oil production. Costs of production are coming down. And they're saying that a lot of these players are, in fact, breaking even or slightly profitable at around $40 a barrel. So it's entirely possible. I'm not telling you, I got a crystal ball, but it's entirely possible that we're going to see a bounce off the bottom here, and at least if nothing else, just a decent dead cat bounce. Would take oil up to a pretty substantial difference from where we are now, and so we'll see, man. We'll see how this plays out.
Well, listen, thanks for calling in, David. And if you see Tom Cruise or Travolta, give him my best, okay?
Thanks, Larry. Appreciate it.
All right, buddy. Thank you. Okay, I believe we have, without further ado, we have Priceline Charlie from La Paz, Mexico. Charlie, are you there?
Yes. Hi, Larry. How are you? Today I'm in Atlanta.
Atlanta. You found your way home. Well, that's good. What can I do for you, my friend?
I tell a little story. I want to tell a quick story about gold before we start. I've been collecting gold for many, many years. 1 ounce every time. I gave a bunch of it to my kids, and I said, as part of the inheritance and part of the estate planning, and, you give them money for the houses and so on. I don't want them to wait for me to die to get their money. I said, here, take your money now and wish me well.
A good way to do it, I think, my friend. I've done exactly the same thing.
One of my sons took all my 1 ounces and sold it and turned it into 1/4 ounces, 1/10 ounces. And then he went, as he was buying rolls of it, on eBay and wherever he can get it, he looked through them and found one of them that he had paid like $320-some for. He then went ahead and graded it by PCGS. It was a perfect 70, and it was rare. It was a 1/4 ounce. He mentioned to a couple of dealers and says, I spent $325. With everything, I spent $400. I'd like to get $33,000 for it.
I like his style. Charlie, stay with us. We got to pay a few bills here, okay?
Okay.
Thank you.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. As this one-of-a-kind winter comes to a close and spring approaches, it only seems fitting that now is the perfect time for a spring Tiger Dollar sale. For this week only, we're doubling the bonus that we give when you purchase any amount of Tiger Dollars. Normally, we offer a 10, 15, or 20% bonus when you purchase Tiger Dollars, but for this week only, we're doubling our special offers, and you can now get up to a 20, 30, or even up to a 40% bonus on your Tiger Dollar purchase. This is one of our best Tiger Dollar sales of the year and won't be around for long. Tiger Dollars can be used for any TFNN product or service and provide a great way to lock in added value on your subscriptions. Tiger Dollars never expire, so whether you're a current subscriber or plan on subscribing at one point in the future, take advantage of this spring Tiger Dollar sale this week only and get up to a 40% bonus on your Tiger Dollar purchase. This sale ends Sunday night, so don't miss out. All the details are on the front page of TFNN.com. Get your Tiger Dollars today and lock in your bonus before this sale passes you by.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, and we're on with Priceline Charlie from Atlanta this time. Charlie, you asked to take a look at a stock, UGAZ?
Priceline, PCLN.
Oh, yes, Priceline. We've already posted that one. It looks like this is headed towards $1,100 a share, Charlie. I mean, it's a much weaker than market stock. We've had some pretty good rallies here in the stock market since March 9th, and this can't get out of its own way. That's a bad sign. And we have that big gap down there at 1,100 too. So I believe we got at least another $40 to go on the downside in Priceline. That's what it appears to be. It appears to me.
Okay, so you don't think there's a little bit of a bounce coming soon?
Well, I'm a little. There should have been. I mean, it's when you have a stock that's weaker than the market, that's telling you something, because usually stocks will go up together, especially stocks that are in strong trends like Priceline and trading at $1,150 a share. You would think that it would get some type of a bounce, but it's been basically straight down for 2 weeks, and that's telling us that that's basically what we're looking at.
I covered some at 1180, and I'm looking for a bounce, but it always is strange when you cover something and you want it to go up, it always goes down. So,
in other words, you can't get the exact low tick and the exact high tick all the time, Charlie. Gee, that's amazing. I thought I was the only one that did that.
No, it's happening to me too. By the way, I want to tell the story about that gold coin for a second. My son forwarded information to a couple of dealers, and they bid to some of their favorite customers. They got a little bit of a war on that coin. It went up to $57,000. So anybody
For one coin?
From one quarter ounce coin in perfect condition. So really, if some of the people who are buying gold and think the value is just gold, look carefully if you have coins, and then handle them carefully, get them graded. A quarter ounce, 300 can go to, he got 33,000, but the dealer got 57,000. That's incredible. It does happen. And it just happened last month. So, and the reason I'm saying that because gold has many values.
I agree. I buy the bullion coins, of course, but then my favorites are the old U.S. coins. The Indians and the Liberties and the St. Gaudens. Those are my favorite coins. Especially the $10 Indian is one of my favorite gold coins to own.
Mm-hmm.
I was fortunate enough many years ago to buy a complete set of coins for my girls, including the $4 piece and the $1 piece. And and all of the sequences of 2.5, 5s, 10s, and 20s, and they appreciated it very much. And there was a lot of history involved with it because, that's how our country started, was with hard currency, and that's what it's really like.
Mm-hmm. I look at this. What you're really saying is that various sizes and various gold coins have different values, and just don't buy the 1 ounce or buy the smaller ones, because the smaller ones have very unique values, and when you discover, you will be rewarded. Mm-hmm. Thank you, by the way, very much for your help. I appreciate that.
We appreciate you calling in, Charlie. When are you heading back to Mexico?
In about 3 to 4 weeks. I'm here for an auction. There's an auction that I'm going to be attending and looking for some equipment.
Let me know how the price structure is. If you're getting some really good buys like you got up in Minnesota recently, I'd like to know just, what that market's like right now.
I'll let you know what happens. It should be on the 26th of March.
Okay, my friend. Listen, thanks for calling in, and you have a wonderful weekend and a safe trip to La Paz.
Thank you. Same to you. Bye.
All right, my friend. Okay, folks, that's it. We're winding it up here for Tiger TV. Live every day in an attitude of gratitude, and may God bless.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.